Are you asking yourself why you owed so much in taxes this year? Now that the tax season is over for most people, you might be thinking, how can I pay less in taxes? My name is James Comblo. I'm a holistic financial planner, and here are 3 tips to reduce your taxes. Now, when we think about tax planning, we're not talking about a tax return that you file every year. We're thinking about your lifetime tax burden because taxes are most likely your single largest expense while you're working, and it will most likely be your single largest expense when you retire. So the question we ask is, how can we limit your lifetime tax burden? And it really comes down to these 7 simple words. Not all money is taxed the same. And thinking about tax management, we take those 7 words and we apply them to your personal financial situation. This is not something that happens every spring and then you forget about it until next year. We have to be proactive throughout the year because oftentimes tax planning is one of those things where you either use it or you lose it during the year. Now, the first way to reduce your annual tax burden is to make contributions to your retirement accounts and things like your 401k or an IRA. These pre-tax accounts will immediately reduce your taxable income and wash some tax liability right off of your return. But it's important to understand that in these accounts, you receive a tax burden today by way of a deduction, but you still owe taxes on this money later, and it will be due when you begin to withdraw money from these accounts in retirement. And so we have to zoom out and really look at things like your lifetime tax burden and then the current tax rate environment. Now, if you found yourself in a higher tax bracket, something like a 32 or 35% tax rate, then it probably makes sense to defer these taxes until later. But if you're in that 22 or 24% bracket or lower, like most Americans, it may make sense to contribute to a different type of retirement account and not receive that upfront deduction, knowing that over your lifetime, you'll actually pay lower or less taxes because of these contributions. Now, the second way to lower your taxes is by contributing to a tax-advantaged account like a Roth IRA, like cash value life insurance, or even a health savings account, where the contributions can be made with a pre-tax or after-tax dollars, mostly after-tax dollars, but contributions will go into these accounts after tax, meaning that you'll not get a tax deduction today for contributing to these accounts, but all the growth inside of those accounts will be tax deferred. And then when you withdraw the money from these accounts, that money will be tax free. It's like paying taxes on the small seed instead of on the large harvest, right? In these accounts, your taxes do not grow alongside your investments. And then the third tip is about creating or even just getting credit for deductions. And there are the easy ones that most people know about, like mortgage interest deductions, medical and educational expense deductions. But then there are some that most people are unaware of, right? Things like making donations to charity, where if you're not itemizing on your tax return, you're probably not getting credit for all the donations that you made throughout the year. You might want to think about bundling donations, where we take a few years worth of donations, bundle them together, and contribute them to something like a donor advised fund so that you get credit for them right now, but then you can distribute that money to the charity of your choice over the next 5 or 10-year period. If you're over the age of 70 and a half, you can do what's known as a qualified charitable distribution, or a QCD, where you send money directly from your pre-tax retirement account to a charity, and that withdrawal never hits your tax return. We also have to keep in mind that taxes are always changing. And so President Biden just released his budget proposal a few weeks ago, known as the Green Book, and his administration wants to make some significant changes to the tax code. So we have to always stay informed about what changes are happening and then adjust our tax plan accordingly. And so when we think about taxes, it's not just each and every year. Sometimes we need to zoom out a little bit, maybe think 3, 4, 5 moves ahead in order to really maximize your results. Now, if you enjoyed this video, you found it useful, click that subscribe button so that you can be alerted to the most up-to-date tax and financial information. And then follow us on all of your social media platforms like Instagram, LinkedIn, Facebook. This way you never miss an update.